A lot of traders lose money on trend days, and it's because they fight the trend. Now, what you want to do on a trend day is look for consistently higher highs and higher lows in an uptrend day, or lower highs and lower lows in a downtrend day, and don't try to pick the end of the trend, because the trend almost always goes further than you expect. Now, a lot of times on a strong trend day, you're going to have these moments where you get these spikes like this, where it just spikes up and creates an unsustainable trend. And then you'll get these over and over again on trend days where you see these big spikes. But a lot of times what's actually happening here is that you are forming a more sustainable trend after the spike. So for example, in this particular one, we can let's just draw this over here like this. Let's see. We'll draw maybe off of one of these lows up here. Let's see, from here. Connect it to the highs. And then what you can see, this is probably, yeah. So you can see there's a spike and a channel. You'll see this a lot on trend days. If I zoom way out, this was one of those days where there was a bunch of these, where there's a trend up, a spike, a channel, another spike, another channel. There's a lot of that on a trend day sometimes. Now, it's not always that you can just draw one big trend and it encapsulates the whole day. So in a case like this, you have to still draw your channels and wait for the right moments to take longs, because you don't want to just take longs on trend days in random areas, because you could still take a lot of losses doing this. So in a case where you have a trend day and you've identified areas like this one, where we have this touch, we have this touch, we have this touch here. Well, now what we want to look for is, where have the corrections ended? Have we had legs of correction off of the bottom of the trend line where I can get a really good entry? So in this case, for example, we have a pullback there. This is a two-legged correction. One leg back, comes back up, second leg back, and we get a nice, really bullish candle right here off of the trend line. You can go long one tick above the candle. Stop loss goes one tick below. Pretty low risk, and you can catch a nice trade there. We actually get another one here where we get a new high, we get a pullback, tries to go higher here, creates an equal high, so you could treat that like a first leg, pullback, second leg. We have another second entry, long. Go long one tick above that bar, stop loss goes one tick below. Then we start coming down again here. Now this is where you want to be careful, because you have a pullback, you have a lower high, which is a first entry, but when it goes lower here, you get an inside bar, and then this bar is all inside this big bar. So you want to avoid this, because this is like congestion. When you start to have inside bars inside of another bar, it basically forms a little micro sort of range. So you want to avoid taking that trade there, because that is looking like congestion. So you just be patient. Now a long would have worked there, but it's not ideal. Now, as the trend finally breaks, you will sometimes form a trend in a different direction for a little while. So what we want to do is identify our three swings, which we have 1, 2, and 3 right here. So we're going to draw our trend line off of those levels. We'll draw the lows off of the lows, and we'll see if we can find some setups in here. And we'll wait for two-legged corrections with good signal bars. Here's a low. We have a pullback. There's a first entry, pullback, second entry short, right? One tick below this bar, stop loss goes one tick above, and you can ride that one. Now, this is not the most perfect signal bar. I like my bar to be going lower to close in its lower 1/3. This is right on the cusp. Just like if I'm going long, I like the bar to close in its upper 1/3, but this is still decent. And you can see that. And then you even get a lower high off of the level. That's a good looking signal bar. And this is one where the lower high is still valid. So you could look to possibly take the lower high there and take that one down. And there's two trades right in there. And you can find setups like this on trend days all the time. Now, if you start to zoom out, sometimes you even identify larger patterns, right? Now, you don't always have them in real time until later on. So that's why I didn't want to start with this. But sometimes you have bigger patterns. Sometimes there's a bigger channel happening. I don't recall on that day what there was, but as you're trading it, you can draw these trend lines. Now, after you start to break through, you always want to respect short-term trend lines. So when you get a short-term trend line that does this, now you start going, okay, we might get a new low here, but this thing could turn into something else, and it turns into a spike in channel. Same thing. When you get this spike in channel here, you can start to identify, is there any opportunities to take trades? Now there might be. There's actually a pullback first entry, pullback second entry long right there, a little scalp. You could take that as a scalp trade. You're not going to get a huge winner out of that, but you get a winner right there. And then we form another downtrend. Now we were expecting a new low to be made after that break. This one is a little bit, this one isn't as good. You have this swing, but it's not fitting that great. It is there, but it's not fitting that great. But I don't see any really good second entries in here. Most of them make new lows, so you can't really take them. And there you go. You can find trade setups like this every single day on every time frame, every asset, and it's a lot easier than you think. You don't need to have a bunch of fancy indicators and wild strategies. The only indicator I have on here is the 21 period exponential moving average on the 2000 tick ES chart. And I just draw my lines out and I look for these things with my eyes and I can find them. They work on every time frame.